Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, November 20, the EURUSD pair bounced from the 76% corrective level at 1.1517. and turned in favor of the euro, while showing absolutely no interesting movement despite a strong news background. Today, the upward movement may continue toward the 61% Fibonacci level at 1.1594. A consolidation of the pair below 1517 will work in favor of the US dollar and continue decline toward the next corrective 100% corrective level at 1.1392. The wave structure on the early chart remains simple and clear. The latest upward wave did not break the previous peg, while the last completed downward wave broke the previous low. Thus, the trend remains bearish at the moment. Bullish traders have gone on the offensive, but their efforts are still insufficient to form a trend. To recognize the bearish trend as complete, the pair must rise above 1.1656 or form two consecutive bullish waves. On the 4-hour chart, the pair bounced from the 23% corrective level at 1.1649. Turned in favor of the US currency and began a new downward move. A consolidation below 1538 allows us to expect continued decline toward the 50% Fibonacci level at 1.1448. A consolidation above 1538 will favor the euro and some growth toward the next resistance level at 1649 and 1680. A bullish divergence in the CCI technical indicator increases the likelihood of an upward reversal. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair of the last 5 trading days is 78 pips and continues to decline. Therefore, on Friday, November 21, we expect movement within a range limited by the levels of 1.3003 and 31.59. The upper channel of the linear regression is directed downward. But this is only due to a technical correction on higher time frames. The CCI technical indicator has entered the oversold area for the 6th time in recent months, forming another bullish divergence. The GBPUSD currency pair is attempting to resume its upward trend for 2025, and its long-term prospects remain unchanged. Donald Trump's policies will continue to pressure the dollar, so we do not expect the US currency to grow. Thus, long positions targeting 1.3306 and 34.28 remain relevant now for the near term when the price is above the moving average line. It's a sign line on the graphic. If the price is below the moving average, small shorts can be considered targeting 1.3000 on technical grounds. From time to time, the US currency exhibits correction on a global scale, but real signs of the end of the trade war or other positive global factors are needed for sustained strengthening.
That's all for today. See you online soon.